Hi, it's Jimmy Nguyen, founding president of Bitcoin Association, the global industry organization that supports Bitcoin SV. Welcome to another episode of Blockchain Policy Matters. It's our online show where we talk to leaders and policymakers who are at the forefront of the digital asset and blockchain sectors. Watch and you'll learn why blockchain policy matters. I'm thrilled to welcome today our special guest, the woman known affectionately as Crypto Mom to many in the digital asset world. Commissioner Hester Peirce was appointed by President Trump to the Securities and Exchange Commission and was first sworn in January 2018. She stated in her confirmation testimony that crypto is going to be here to stay, and I would like us to set up a regulatory framework that works well for crypto. According to Forbes, she's been heralded by the crypto community for seeing the benefits of this new technology, as well as being outspoken as to how the SEC has muddied the waters in terms of regulatory clarity. Before joining the SEC, Commissioner Peirce conducted research on the regulation of financial assets and markets at the Mercatus Center at George Mason University. And before that, she was senior counsel on the U.S. Senate Banking Committee, where she advised then ranking member Richard Shelby from Alabama on securities issues. She also served as counsel to SEC Commissioner Paul Atkins and worked as a staff attorney in the SEC's Division of Investment Management. Welcome, Commissioner Peirce. I'm so happy to be talking to you today.
Jimmy, thanks for having me. I'm delighted to be here. I should note that the views that I represent are my own views and not necessarily those of the SEC or my fellow commissioners.
Indeed, as we'll talk about. Can you please tell us about how you gained your own personal interest in this great world of digital assets and blockchain technology?
Well, I think in some sense the issue was handed to me. I mean, at the time I came into the SEC at the beginning of 2018, we certainly had a lot of activity in 2017, and Bitcoin had been around for quite a while. And so there were starting to be a lot of interactions with our regulatory framework, a lot of questions about how our regulatory framework would affect this space. And so it was a natural for me to pay attention to it. We also had early on in my tenure a Bitcoin exchange traded product application that came before us. And so when I came to the SEC, I knew a little bit about Bitcoin because some of my colleagues at the Mercatus Center had worked on that issue and been doing a lot of thinking about it. So I had learned something from them, but I also wanted to think about how the SEC could be better on innovation generally. And this sort of presented itself as an example of a space where there might be innovation. There was innovation going on, and there might be innovation that touched our space. And so it made sense for me to do some thinking about it.
You mentioned your time at the Mercatus Center at George Mason University. There you were conducting research into financial market regulation. What lessons from your experience there have informed your philosophy in how the SEC should regulate or not digital assets?
The Mercatus Center was really one of the pioneers in thinking about regulation, how to do it better, how to do it more effectively, and also in ways that were less distortive of the economy and allowed entities to do what they needed to do to serve people, but at the same time, make sure that there are appropriate protections in place. And so that was the reason I went there, was really to learn from the economists who worked there, how they thought about regulation, how they thought about measuring its costs and benefits and those kinds of things. And so that really has informed and helped me to think through regulation. I'm always trying to think through what are the unintended consequences of what we're doing? What can we do after we've done something to take a look back and learn from what we did, and if necessary, change what we did. And so I think that kind of flexibility and that kind of willingness to think about the full range of consequences is really important in this space where things are changing really fast and where it's sometimes difficult to anticipate in advance what the consequences of something you do might be.
Yeah, and certainly digital assets and blockchain technology are very much in the news today with other government agency leaders in the US. For example, US Treasury Secretary Janet Yellen has recently commented that Bitcoin in her mind is an extremely inefficient transaction mechanism and a highly speculative asset. And you probably heard that Federal Reserve Chairman Jerome Powell has told Congress that the Fed is looking carefully at whether to issue a US digital dollar. As you hear these types of comments from other agency representatives, what do you think should be principles that should guide their and all government agencies thinking to avoid, as you mentioned, unintended consequences?
So I think we can take some measure of hope from the fact that people are paying attention to this space and they realize that it's something that's worth talking about. And so that's a good thing. What I would urge my fellow regulators and people at the Fed to think about is to think not only, have the reaction of looking at where the negatives are, but to really look for the positives. So if the Fed is considering a CBDC, that may be something that they want to do just in terms as an infrastructure project, essentially, as Chris Giancarlo has described it. But I would hope that they don't rule out the positive things that can happen in a purely private sector as well. So that's one principle. Remember that a lot of the real innovation happens in the private sector. Don't try to squelch that out. And don't view this as a competition between the private and the public sector. I think that you can have a public sector, you can have a public CBDC, but you can also have a lot of this stuff happening on the private side, and respect that. There tends to be a conservatism, which I think is reflected in a lot of comments from regulators, but look at it optimistically too, and look at the potential for technology to change things for the better for everyone. And I don't think that we win out as regulators when we try to prevent innovation from happening or try to shift it outside of the United States. I think that will ultimately not serve us well.
And I agree with you. I think that, for example, CBDCs can certainly coexist with the many digital currency and blockchain projects out there. In fact, in the Bitcoin SV world, some of our companies are out talking to central banks about the idea of building their CBDC on our blockchain because it scales. How else do you think that government-related uses of digital assets or blockchain can coexist with some of the private sector innovation?
Well, I think governments are certainly trying to think about ways that they can use it for a whole host of purposes. It's kind of early days, I think, in terms of trying to figure that out. I mean, you can think of financial and non-financial uses. A lot of people talk about land title and things like that being on the blockchain. From a securities regulator perspective, I think about how can blockchain assist us in maybe making more efficient some of the processes that really came to light over the past couple months as we've been thinking about the events in the rise in the meme stocks and some of the concerns around settlement times and things like that. Tracking where shares are, who owns what shares when, those kinds of things matter not only for settlement purposes, but they matter for proxy voting purposes. And so people have talked about integrating it into systems for proxy voting. I hope that a lot of that innovation happens in the private sector as opposed to us taking it over as a securities regulator and saying we're going to run something and have people use this infrastructure that we build. I think the benefit of some of these distributed ledger type innovations is that it does contribute to resiliency by taking away common central points of failure that everyone is using. So to the extent that we can use this technology to enhance the resiliency of our financial system, I think we'll be better off.
Yeah, I absolutely agree, because we view, for example, Bitcoin and the blockchain as a ledger that can power things such as tokenizing public companies' stock, being able to track it on a ledger more quickly for trades, as well as to effectuate real-time settlement, which obviously became an issue with some of the recent events. So I view private sector ledger applications that could power that. That's something that could be really useful to achieve regulator goals at the same time.
I mean, I think we do have to be careful always with these kinds of things. Sometimes I get excited about the new technology and about the new potential for changes that will come out of that. And we have to go in eyes wide open, right? Solutions can come from new technology. There can be new risks that are associated with it. And you've got to think about the whole picture. You have to think about it holistically, and manage people's expectations. Even on the real time, I agree with you that the settlement on the blockchain tends to be much more real time than it is in our system. But there are consequences of moving away from a delayed settlement system to a real time or closer to real time system that we can't just skirt over those. We have to, or rush past those and not think about them. We have to think about what the implications of that are for financing and a whole host of other issues. So that's the concern I have, frankly, with the way that some regulators talk about this technology, because they make these statements like, oh, it's all used for illicit activity, or it's an inefficient mechanism an inefficient transaction mechanism. But they're eliding a lot of things, and they're overlooking data that are out there, for example, that are saying, look, this technology is used for illegal activity, but actually much less than maybe cash is used in illegal activity. Or they're assuming that Bitcoin is intended only to be a way that I pay for my coffee and my and clothing purchases and groceries, when in reality, maybe the comparison is actually something else. And so I think we need to make sure as regulators that we're being a little bit nuanced in the way we approach things. And I think that's something that people outside of the regulatory community can really help us do, sharpen our thinking. I certainly draw a lot from what I learned from outside, and I need that continuing sharpening of my thinking.
Yeah, no, that's a fair point, because I think for people, it's very easy to make broad sweeping statements about digital currency, such as, Bitcoin is, only meant to be used to pay for daily purchases. That's true, but we view it as a powerful data ledger, for example, that can power much more in terms of enterprise applications and bring honesty to the world that people don't see, perhaps because of the narrative that's grown around Bitcoin in its early days. So I think it is a very useful point to get people to take a step back and not just make broad sweeping characterizations about the whole sector.
Yeah.
Speaking of which, during your time so far on the SEC, have you seen any progress and evolution in your fellow commissioners' understanding and approach to the digital asset and blockchain space?
Yeah, I mean, I think everyone is getting smarter on this stuff as there's more and more activity happening in this space, and as there's more and more interest, maybe from the players that we're more used to dealing with on a regular basis on other issues. I certainly am hopeful if Gary Gensler gets confirmed to be chairman. He had his confirmation hearing today. I'm hopeful that he will bring the knowledge that he has from his time at MIT to the commission and help us think about these issues in a more sophisticated way, in a way that's more suited to providing regulatory clarity.
Yeah, and speaking of Gary Gensler, yes, I know that's obviously in the news today. Assuming he gets confirmed as the new SEC chairman, how do you envision working with him to try and encourage innovation and supporting innovation in the digital asset space?
Well, I think that it'll be a good working relationship. I mean, he knows that I have enthusiasm for trying to do a better job as a regulator of a technologically advancing industry, and I know that he has an understanding of it, but also he comes to the job with more of a willingness to embrace a more regulatory philosophy, perhaps, than I do, and that's okay. I mean, I think that's part of what makes the SEC as a commission a more effective regulator. We've got people coming with a whole different sets of views on issues, and we can bring those together. I have been calling for more regulatory clarity, and so I think that this is a really good opportunity for someone like Gary, who has a lot of experience in standing up regulatory structures, to work with me. I've put out a safe harbor suggestion. I'm not wedded to the proposal that I put out, but I certainly will discuss with him doing something like that so that we can provide clarity through a means other than no action relief or enforcement actions, which has been what we've tended to do so far.
Yeah, that leads me to a big topic I want to talk with you about, which is your interest in the need to give more regulatory clarity to the digital asset business sector. As someone who leads a global industry organization, I can absolutely tell you that would be much appreciated, because I hear from a lot of our member companies that they want to launch some venture, some initiative, some coin or token, but are concerned about getting clarity. Why do you think we've not had clarity in the US in particular, in certain areas of regulation for digital asset space? And what are some of the ways we can improve that?
Well, I think one of the reasons, and this is a philosophy that I shared when I came in, which is that our securities laws are meant to be very fluid and very adjustable to whatever the newest way of doing securities offerings is, and we shouldn't have to change them every time someone comes up with a new way of doing things. Now, that said, as I've learned more about this space, I see a real need to provide specific clarity for this space, because the lines between what's a securities offering and what's not are actually much more difficult to draw in this area than they are in others. I mean, I could argue that maybe in the past we haven't really gotten the line right in other areas either, but I think this one really poses some unique challenges. And so I think that's what we really need to do is help people think through, how can I do a token distribution event without having it fall under the securities laws? One answer is to say, well, you have to do it just the way Satoshi did, and you let people mine the tokens and do it that way. But I don't know that we can say that's the only way that you can do something compliant with the securities laws. Again, I'm not weighing in on behalf of any particular technology or how any particular network has gotten started, but I think people really need to have something to grab hold of there so that they can feel confident in releasing tokens out into the wider world.
Right, and as we have this DeFi wave that has hit us over the past year, it makes me wonder whether or not it's going to end up like the ICO craze of a few years ago in terms of leading to assets that get regulatory scrutiny. Let's talk about.
I mean, and I think that's a fair question to raise, right? This past summer and even into the current has been just a tremendous volume of activity in the DeFi space, and it's really pretty impressive to see all of the brain power being poured into that area. And so what I'm concerned about is that we can't wait 3 years to go back and say, okay, well, this is what you did, and this is how it violated the securities laws. If we're seeing things now, we really need to be telling people now, this is what you need to bear in mind as you're engaging in this activity. But it's hard because everything's changing so fast, and a lot of it doesn't even fall within the SEC's jurisdiction. But I think for other regulators in whose jurisdiction it might potentially fall, what happened with ICOs, I think, is instructive for them too, to think about provide clarity earlier, and try to provide some kind of guide rail, guiding rules, a framework that people can operate within and experiment within.
Let's dig into some of the practical mechanisms that a company, a token issuer, for example, could use to try and get some regulatory clarity, and your thoughts on how well they work or not. One you mentioned is SEC no action letters. When I was a lawyer, I'd have clients contact me sometimes and say, should I approach the SEC and get a no action letter? How effective do you think that is and resource efficient for startup ventures to do?
Well, no action letters have a long history at the SEC. I mean, it's essentially a way to get an informal opinion from the staff and sometimes from the commission itself as to whether something can be done. And usually there are conditions around that. So, if you do it following those conditions, then you know that you're unlikely to face a securities enforcement action. And I think that is and can be a good model. I think in this space, it hasn't worked that well. Several no action letters we've seen, I would say in some cases, that activity clearly fell outside of our purview, and query whether a no action letter just added a little bit more uncertainty for other people who thought, wow, I didn't even think I would have to ask the SEC to do that. The other real concern I have is that it takes a long time. It can take a long time. And so you really have to go in knowing what it is you want, with a clear sense of what you're going to ask for. And that can help to push things through. It helps to have a lawyer who's had experience, of course, with the process. And one concern that I've heard is that, sometimes the discussions go on for a long time, and then you realize you're not going to end up with a no action letter. And that's the nature of the business on the one hand, but on the other hand, it can be discouraging for an entity that's really trying to get started and can't do anything to make money until it gets that no action letter. It can be a long and daunting process for a new entrant. And so, look, I like the process because I think it operates a little bit like a sandbox of sorts. But at the same time, I think we need to think at the SEC about streamlining the process, not only in this crypto space, but across the board. And that's a bigger project and a difficult undertaking.
Yeah, because the reality is when people want to launch a digital asset project or venture, they want to move quickly. The market moves so quickly, and no action letters are a very useful tool. I agree. It's the length of time, I think, that causes fewer companies to seek them than you might think in the digital asset space.
Yeah, and I think one of the problems that emerges from that is that, there's competition. And so people are angling, and it matters from a competitive standpoint who gets the first no action letter on a particular issue. And so we aren't always thinking about it from that business perspective, but it really is a competitive issue. And so we have to be sensitive to that as well.
So now let's move to a second mechanism, which you mentioned as well, safe harbors. And this is an approach I like a lot as well. So in February of 2020, a little over a year ago, you outlined a proposal for a 3-year safe harbor program for digital currency businesses that are interested in offering tokens to make them exempt from the registration provisions of the securities laws in the United States if they met certain conditions. Will you tell our audience about your proposal, and then we can talk a little bit more about how it's being perceived?
Sure, and I think the thing that drove me to think about a safe harbor is just this idea of wanting to provide a level playing field so that anyone can take advantage of it on the same terms as anyone else. And the idea is that if you've spent a considerable amount of time and money developing a project, and you're ready to launch your network, and you want to get the tokens out into the hands of people who can actually use them, it really is a concern about how you could do that consistent with the law. So this would allow you to not have to really answer whether that token distribution event was a securities offering or not. Instead, you would make the disclosures prescribed in the safe harbor, which are intended to get to the things that token purchasers would be interested in knowing. So they're a bit more tailored than the generic kinds of disclosures that you'd make in a securities offering. And then you would have 3 years within which time you would be covered by the anti-fraud provisions of the securities laws. So you can't just go out there and say whatever you want. You've got to be truthful. But beyond that, the securities laws aren't applying to transactions in these tokens. They can move freely. They can trade on trading platforms. And then the theory is that at the end of the 3 years, you're going to have a stronger case that it's decentralized, or that there's a utility to the token. And so it's easier to say, look, it's clear that when these things move around, those movements aren't securities transactions. So that's kind of the premise of it.
And for our audience, the safe harbor program that's proposed by Commissioner Peirce has 3 requirements. The initial development team, if you want to issue a token, need to intend for your network to reach network maturity within 3 years. 2, disclose the plan of development, including the current state and timeline for development of the network, provides a roadmap to achieve that network maturity. And 3, the token must be offered and sold for the purpose of facilitating access to participation on or the development of the network. So
Jimmy does a better job summarizing it than I do. That's good, yes.
How has the reaction been in the SEC as well as in other government agencies to your proposed safe harbor?
Well, as with anything else in the crypto space, it's gotten a wide variety of reactions, some of which are positive, many of which have been positive, some of which have been loudly negative. But I have taken that feedback, and I'm working on developing a version 2.0, and that's something that really what I want to do is present it to the new chairman and say, look, here's an idea of what we could do to move forward. Before it became final, it would have to go through our normal processes, which allow, again, for more input. But I think that's really the goal that I have. I would have loved to see something like this move forward earlier than now. And a lot of people have looked for other ways to do things, but I still think having something like that on the books could be quite useful.
And you actually mentioned the value of safe harbor program in your dissent to the SEC settlement last September with an esports company called Unicorn. I was following, that whole circumstance. And for those of you who are watching who are not familiar, the Securities and Exchange Commission reached a settlement with an esports company called Unicorn related to their initial coin offering token. And the settlement resulted in the token being permanently disabled and the company paying a $6.1 million penalty. You pointed out that Unicorn was charged only with failure to register the token, not with any fraud. As you mentioned, there's a difference between the registration requirement and not committing fraud in your promotion of an asset. Tell us why you disagreed with that particular outcome in the Unicorn investigation and how you think a safe harbor program, if it existed, would have helped create innovation from companies like Unicorn.
The registration provisions are intended to, foster this exchange of information with investors when investors buy something. It's intended to be protective of investors. And so when we come out with an enforcement action, again, where there's not fraud and it's just a registration violation, and the solution is basically to say to the company, well, you can't move forward with this project with your token. I don't understand how that benefits the people who purchased the token in the first place. It seems to me that you're actually hurting those people. And so again, we can argue about when something is a securities offering or not. I think that people who have worked in this space can disagree legitimately on whether something or not is a securities offering because the lines are not clear necessarily. They're intentionally somewhat ambiguous to allow us to capture anything that is a securities offering but calls itself something else. But when you look to remedies, I think you really have to be careful in thinking about how to craft those. And it's difficult in other areas too. We sometimes my colleagues and I sometimes disagree in other areas as well. But I just don't understand how shutting the project, essentially turning the project off, is beneficial to people.
Let's turn to sandbox programs. I've seen many countries around the world exploring some type of sandbox program for digital asset businesses. What are your feeling on sandbox programs? Are there any particular types of sandboxes that you'd like to see created here in the United States?
So I've been somewhat negative on sandboxes because I worry that when you've got a regulator playing in the sandbox with the innovators, it affects the way that the innovators innovate. Sort of, when the parents sit in the sandbox with the kids aren't as creative as they might be if the parents weren't there. And I'm not comparing regulators to parents, but I think that's something that we have to bear in mind when we design these programs. On the other hand, I think that a sandbox type approach could be quite useful across agencies in the United States, because we do have such a fragmented regulatory structure, and we have that. There are good reasons for having that kind of fragmentation, but it can be difficult for someone with a new technology or a new product and service that doesn't fit neatly into any one particular box. So could we create a sandbox that would allow someone to come to one centralized place, would allow the regulators and facilitate conversation among the regulators, allow the regulators to consider it together? That might be a good way forward. It's complicated legally because an agency like mine is an independent regulatory agency. Some of the banking regulators are, they're part of the executive branch. So it can be complicated, but I think it might be worth Congress wrestling with some of those things to think about creating something like that.
As someone, as I said, who leads an ecosystem with a lot of companies looking to build things, I can tell you that would be very welcome, because one of the questions I often get is, well, what agency do I start with, right? It's especially in the United States compared to other countries where our regulation bodies are more splintered. Yeah.
I mean, and it can really be daunting. And I've heard of projects that have just thrown their hands up and said, you know what, we can't do this. A bigger company might have the bandwidth, the financial bandwidth, the money to last through a really long process where you're getting kicked from one regulator to the next. But for smaller players, that can be the death knell.
Yes. Now, our ecosystem builds on the version of Bitcoin, which is a public ledger. And one of the values we see to a public ledger is transparency, accessibility to the same data set and transaction history that everyone can see. In a way to create a more honest world, the word honest is actually used 15 times in the Bitcoin white paper from Satoshi Nakamoto. People probably don't realize that. Do you see advantages that regulators could draw from applications built by private sector companies on public ledgers to help you with your oversight duties?
I mean, I think we've already seen that the public blockchain allows for a level of, surveillance. I hate to use that term, that it doesn't exist in some other spaces. So certainly regulators can use that. I think regulators, as with any new technology that they're thinking about using, they have to use it with care, because we do need to make sure that people can engage in transactions without having them monitored by the government, unless there's a real reason for the government to be monitoring them. So with the greater power that this technology offers, regulators need to be having conversations early and with a broad audience from the public about how to manage this balance between, the great power that the technology gives us and the great need to take care of people's civil liberties.
Yeah, like with all things in law and policy, it's about striking a good balance, right?
Yeah.
You mentioned Bitcoin ETFs as one of the first things you confronted when you first joined the SEC, one of the first applications in the United States, and you voiced support to approve a Bitcoin exchange traded product here in the US. Why do you think Bitcoin ETF would be valuable for our industry in our country?
Well, I think a lot of people are looking for a way to access the asset class and do so along the same lines that they do access other types of assets. And so products that trade in our securities markets afford a level of convenience and an ability to have everything in one place, an ability to get in and out of the product in the same way that you get in and out of other securities products. So I think that it's attractive to a lot of people for that. I mean, some people say, well, why not just tell people to go buy on the spot market? And that's fine too for some people. And I'm not advocating any kind of portfolio composition to people, but I've heard from a lot of people, institutional and retail, that they want access to crypto through our regulated markets. And so it seems to me that it makes sense for us to consider how to do that. Other countries have done it already. There are products that allow people to access crypto through our securities markets, but they're costlier than probably an exchange traded product would be. I think we've dug ourselves into a little bit of a hole here because we've waited a long time now to approve this kind of product. And so the market, it's changed quite a bit. And now, I mentioned first mover advantage before, but that's a big issue in this space. And it's one that's much harder for us to deal with now that the market is further along down the road than it would have been a couple years ago. So I am concerned about this space. We always have to look at the facts and circumstances of any particular application that matters. But I hope it's something that we'll confront sooner rather than later.
Yeah, because North America's first Bitcoin ETF came to Canada recently, not to the United States. Does that kind of development trigger more of your concern, which you expressed earlier, that too tight of a regulatory approach in the United States will lead to business opportunities and innovation moving out of the United States to other countries?
It certainly does. One of the things that I think has made the United States as strong a player as it is that we have been able to attract the best and brightest from all over the world. They've wanted to come here, they've wanted to live here, they've wanted to work here, build their companies here. And I would like us to continue in that vein. I think we're strongest when we are the place where people love to come and innovate. I want innovation to happen in other parts of the world too, but I think the United States really needs to keep its edge and needs to be the go-to place. And if we don't have a regulatory structure that facilitates that, we're going to see people go elsewhere, and that really makes me sad.
One of the areas of innovation that's happening now is DeFi, as we've talked about. And you've talked recently about how it can help strengthen communities in the US. In fact, you gave a speech on February 22nd at George Washington University, in which you discussed DeFi as building an alternative to the legacy centralized financial systems, and made a point which really struck me, which is that you're a supporter of the use of DeFi innovation to empower individuals to build a better future for themselves, their families, and their communities. Could you explain to us what you mean by that and why that should be really considered by the greater ecosystem that's working on DeFi?
Well, I think our capital markets have been a really valuable resource, and the legacy financial markets have served a lot of people really well. I do think that we are facing the challenge of trying to make sure that the capital markets work for the broadest swath of our community possible. And one way to address some of the concerns that have arisen in the past is to try to work on eliminating intermediaries and facilitating peer-to-peer transactions. As an economist, and I'm not an economist, but I had an undergrad in economics. And so I really appreciate the importance of allowing people to enter into voluntary transactions with one another where both parties benefit. And that's something that DeFi is designed to facilitate. And it's designed to do so in an anonymous, not necessarily that regulators can't look at things, but you're not looking at who your counterparty is because you don't need to know that. You're getting your trust through a different format, through a smart contract instead of through a reliance on a central intermediary. And I think that is a point that you made earlier. There's this, the trust and honesty comes from a different place, and that can be really powerful, and then enabling two individuals who don't know each other to effectively engage in transactions with each other with full confidence that those transactions will be carried out, that the terms of the agreement will be carried out. And that then enables people all over the world and from every community, to come to market on the same terms and get the same terms. And that's very powerful for building individuals' lives and building families and communities.
Yeah, absolutely. In fact, it reinforces a part of the Bitcoin white paper title people forget about: peer-to-peer. They know about the other parts of it, but the peer-to-peer nature of the blockchain transaction ecosystem is really important. It's why we also believe in a scaled blockchain that can power transactions for low cost and fast speed so that you can have individuals empowering themselves. It's not just blockchain for big investors, but you can create applications to do micro lending and to allow trade and transactions even in developing countries. So I'm glad to hear you really focus on the community empowerment aspect of blockchain technology. And with that, let me just ask you a couple of closing questions about what you think about the future of blockchain. What are some exciting use cases you would like to see come to blockchain and digital asset technology in the years to come?
Well, as you were talking there at the end there, I was just thinking it's so hard for us sitting here now to envision what the next decade will bring. I mean, there's so much happening in this space, and some of it's going to fall away. I mean, part of building something new like this is trying stuff, seeing where this technology works and where it really doesn't add anything, or maybe even adds more complexity. But I think one of the areas, again, as I said, because I'm a securities regulator, I'm thinking about how can we address some of the things that make our system less efficient than it otherwise might be. So that's one area. But I think more broadly, I'm excited about bringing people from across the world together. So I said I like everything to be done in the United States. I like to have a lot of activity in the US. But one thing that's really powerful about this is that you can really build something where you've got people all over the world working together on a common enterprise, and they don't even ever have to meet each other. They can do this all spread out. And so that's something that's powerful too. It's going to pose challenges to us regulators. I know it, but I think this ability to draw in talent from so many different places, and places that frankly might have languished were it not for this technology, is something that really gets me excited.
What would you like to see the financial market for digital assets to look like in the next 5 to 10 years? And what would you like your mark on that to be?
Well, as far as my mark, I mean, I don't really care, frankly, about my mark. I think it's no regulatory structure is about a person. It's about setting up a set of rules that work, and they work not arbitrarily, but consistently for everyone. And so my hope would be that my fellow commissioners and I join together and we provide some real clarity for broker dealers, investment advisors, and people trying to do token offerings, people in the DeFi space. And so that's a whole package of things that we have to consider, but so that we would have a system in place where people would know what they're dealing with when they're dealing with the SEC. And then, as I said, perhaps we come up with some kind of cross-agency venue where people can come to get clarity when it touches upon multiple agencies. So that's my hope. But again, because the space is changing quickly, the wish list, the demands for regulatory clarity might change too. And so I hope that we'll be nimble. We're never going to be as nimble as DeFi, for example, but I hope that we'll be as nimble as a regulator can be, and willing to get people answers more quickly than we have been in the past several years.
So we're going to hope for regulatory clarity, nimbleness, innovation, keeping within the United States, as well as working with innovation around the world and expanding the use of this innovative technology with blockchain and digital assets.
Jimmy, that was a good summary. Thank you.
And I want to thank you, Commissioner Peirce, for joining us and having this conversation to our ecosystem and other people interested in digital currency and blockchain across the world. I want to thank you for your service to the SEC and your philosophy and thoughts to really help get understanding of the need for regulatory clarity. It's a topic near and dear to my heart, and I'm sure for many of the people out there building in the blockchain world. Thank you very much, Commissioner Peirce. And this is Jimmy Nguyen. Thank you for watching this episode of Blockchain Policy Matters.